Good morning and welcome to the Fiscal Philosophy YouTube channel. Finally, we have a press release from Medical Properties Trust to go over. This is some new financing that they are pursuing, and they gave certain details in the press release, left out other details. I have the text of it on the next slide here, and so we will go over that momentarily. But I will also give some thoughts and feedback that I have and some thoughts that maybe came up in my Discord. By the way, that is linked in the description. So, Medical Properties Trust announced today that its operating partnership, etc., wholly owned subsidiary, yada yada, is commencing a private offering of up to $2 billion and 500 million euro of senior secured notes due 2032. They plan to use a portion of that to pay the 3.325% senior secured notes due in 2025, 2.5 senior notes due 2026, and 5.25% senior notes due 2026. Including the interest, fees, and expenses. They intend to use any remaining for general corporate purposes, which may include other indebtedness and amounts outstanding on the revolving credit facility, working capital, yada yada. So, also future acquisitions. Yeah, I don't think they're doing much future acquisitions, at least this year. But why today did they do this? Well, first thing is first, I think that as of this moment, they probably are projecting that as far as rates go, they've probably, for the short run anyway, feel like they've gotten as much help as they're going to get from the Fed in terms of cutting rates. So they know it's pretty unlikely that the Fed's going to keep cutting rates, or if they do any more cuts this year, it's not going to be many. And they're better just to kind of start this process now instead of waiting and hoping for another rate cut, because these debt maturities that are going to be paid off with this, they don't want to wait until the last minute, because then you're in a position where maybe you have to do a fire sale, you're backed into a corner, you might default. So they're at that point where it's, hey, time to get off the stump and just do this. Now, one thing that is not mentioned here is what the expected interest rate will be on these secured financings. And this could be because it's not all closed yet, right? It says that they offered these senior secured notes, not that they had lenders in place for all of them yet. And I think it's a bad idea to throw a number out there if they're not actually going to close all of it in that range. If they're wrong, then that could lead to some negative consequences for the share price, etc. So probably you'll hear more about rates after it closes, and they may even hold off telling us until the next earnings. So I wouldn't expect any update on what the new rates are until they actually have it all in place and actually have to disclose it, because they keep their cards close to their vest. This is just management style. We shouldn't expect anything different at this point. Now, the notes that they're planning on paying off are basically the ones due in 2025 and a bunch of ones in 2026, which this is the debt wall that we've been talking about for the last couple years that we've been in this stock. And so it makes sense that they would want to push those maturities out to 2032. That buys a lot of breathing room to get the proverbial house in order for economic conditions to turn back around with the remaining operators that maybe are still struggling from the pandemic. And it's sort of the reset and rebuild from here moment in a lot of ways, at least from my perspective. So this excerpt from the 8K, which I was a little bit behind on this morning, but I have now looked it over. As of January 2025, we have started receiving partial cash rent payments from the retenanted portfolio. That's referring to what was left of the old steward properties, basically the new operators. And they expect payments to ramp up to 57% by the fourth quarter 2025, 78% by second quarter 2026, and 100% by year-end 2026. This ramp-up period is something like a little deal sweetener to get these operators in the door and into these hospitals and set them up for success. But the main takeaway here is that as of January 2025, this month, the partial rent that is due under the under this ramp up period by these new tenants, it has been paid. So cash is coming through the door versus where with Steward, nothing would be getting coming in from these properties. They would just be a drag. So positive cash flow, good. Steward gone, good. And excluding 2 developments, the remaining of 3 former Steward properties that are less than 1% of the total assets are in various stages of being re-tenanted or sold. So Steward out, new operators in, cash coming in the door. Again, this goes back to the thing from the previous section here. They're clearly in their glow up, so to speak. They're out with the old, in with the new. They're resetting and rebuilding from here. Hopefully that will help in terms of their credit rating going forward at some point. This maybe will give them a better risk profile for investors and lenders alike and give them a lot more optionality. All in all, good to see this. And assuming they get those secured financings, it seems like they'll be able to push back a lot of their debt load to 2032, which, again, I think that pretty much clears things up, barring some other awful pandemic type situation that, again, plunges operators into chaos. But for the moment, it seems like things are progressing in a certain direction. If you made it to the end, I'd like to thank you once again. I definitely appreciate it. Make sure you're hitting like for the algorithm, subscribing to the channel, checking out my Discord. Also, on X, I am Mr. Macho Mog. Please follow me there. Trying to build my audience cross platforms so I have that multi-level appeal, ladies and gentlemen. Also, my Discord is linked in the description still, and we always discuss these documents when they come out at length on there. You can get a lot of interesting takes and opinions that don't always make it into the videos. So if you're really wanting to go deep on this, that would be the place to go. It's better than the Yahoo boards, in my opinion, but don't yell at me if you disagree. Comment below with any additional thoughts. Take it easy, everyone.